Hey, good afternoon, everyone. This is Mark from Right Line Trading. Um, I really appreciate you giving me your time. And what we're gonna be looking at today is the NDT, which is Ninja Dome Trader trade execution tool. It's a way of getting better entries on your trades, uh, taking less slippage, being able to execute a trade in a fast market without running around on the Superdome. So we're going to go over all of these things. So let me just move to the disclaimer. Hang on one second. And we're going to move off the slides. That all signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers are for educational demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors or subscribers when the futures, forex, or stock markets, nor any profits or losses may be incurred. Participating in trading in the futures, forex, and stock markets does involve substantial risk. It should be understood that a person can lose a substantial amount of money. Therefore, the participation in these markets is not appropriate for everyone. Always carefully consider your financial position, do your own due diligence, and Right Line Trading is not a registered financial advisor and not a licensed not a licensed commodity trading advisor. Now, with that, I'm going to drop the slides. What we're going to do is, if you work with NinjaTrader, you're going to trade off the Superdome, and the Superdome presents its own particular challenges. I mean, if you traded this morning, you know that the NASDAQ, which we do trade every morning, can move very, very quickly. And you can also, in a very, very quick market, you can sustain slippage on any trade. And that's the thing that you're looking to minimize as much as possible. You really want to get a precision entry. And now I think I always get it mixed up, but I think this is the dynamic dome. And if you want this to move a little bit slower, you have to pay extra for the static dome. Now, right now, price is, you're looking at this, and this is off of the, I believe this is off of the, hold on. Let me move this to the NQ. Now, right now, this is trading off of a sim feed. This is not a live market. And what we're going to do is we're going to bypass the Superdome. We're not going to look to put in a buy stop or a sell stop or chase the market or chase entries. We're simply going to do all of these things at the touch of a button. Now, obviously I don't have a live market up, and I'm going to show you a little bit of what the NDT is capable of doing. The only thing I want to do is just create a bigger right side on the right side of the margin. That's all. Now, the way the tool is configured, you can buy or sell immediately if you choose to do so. So if you want to buy, you can just hit the buy, and then you get your instantaneous entry with your targets and your stop. Whatever your automated trade management strategy is, we're going to program it into the NDT for you. You can have multiple trade management strategies, which we do, and they're going to pop right up. You don't have to run to the dome and place any kind of trade. It'll take it right here. Now, obviously, this is just a simulated feed, and we're going to have the market move up, and we'll take it. You're going to see that it's going to take the first target out, and the stop just moved to break even. So within the NDT, you can configure as many automated trade management strategies as you wish, and you can program one for each instrument. If you trade stocks, you can program one for each stock. We're just going to close it. If you trade futures, you can program one for each future. And if you trade Forex, one for each Forex pair. Now, if the market is moving very quickly, what we usually do, and we never take a trade intra-candle. We only look to take a trade on a candle close to the upside or a candle close to the downside. Now let me just bring this down so it's closer to the center of the chart. So I think it's extremely dangerous to trade intra-candle because the market essentially is expressing itself in every candle, in terms of price action. So we wait to trade on every candle close. If we're going to take a long trade, we'll be on the close of an up candle. If we take a short trade, it's going to be on the close of a down candle. Now, in a fast-moving market, it can be especially challenging because you have to figure out where the candle's going to close. If it's on a range chart, you can do it fairly easily. If you're trading time or tick, it's a lot tougher. And in fact, what I'm going to do is I'm going to change this to a tick chart. I'll just trade a 150 tick. Now, you really don't know. Now, I know there's a tick counter here. I'm going to put that in the indicators. You can see at the bottom, you have ticks remaining, and it's counting it down. But if you want to get an exact entry on a down close, as the tick counter starts to move down, you're never going to be certain where that candle is going to close. So all you have to do is hit sell on a down close, and the NDT will set it up for you. And get you in exactly at the close of the candle. And this one, it kind of jumped just a little bit. And let's try it again. And we're gonna hit sell a down close. Now Sergio's gonna have to configure it a little bit, but what it's gonna do is it's gonna close at the close of the candle to the downside. And I'm not sure why it's not doing that now. Hang on one second. Okay, I just had it configured wrong. Now we're good. Now let's wait till this goes. Hold on 1 second. Okay, now we're going to sell a down close. The trade's going to be pending. And we're going to wait until the tick counter comes down to 0. And it's going to execute a trade right as the tick counter hits 0. There it is. Exactly at 0. What I had to do was change the strategy over on the control panel from range to ticks, which I had not done. So as soon as the candle closed, it got you, in fact, 1 tick below the close of the candle. And in a fast-moving market, it's almost impossible to do that manually. And I'll show you the same thing to the upside. We can just close the trade. I'm going to move this up. I'm going to take out the the printing, because that's just going to get in the way, because we'd be taking a lot of trades. So if we move this to the upside, and the same thing's going to happen with time. I can change the strategy. You're going to have it preset. You're not going to, in the middle of your trading, you're not going to move from ticks to time. But what we're going to do is we're going to buy an up close. Now it's going to hit the next candle. Let's wait till it counts down. It's 106, 104. It's a slow moving market right now because it's after market. But wait till we get to 0, and you'll see that the NDT will execute almost exactly 1 tick above the close of the candle. So you don't have to run in on the Superdome and put your stop or put your entry there. If it's a fast moving market, it's going to go right past your entry. Even 150 tick is not moving that fast because it's after market. We're almost there. In. And you're in exactly 1 tick above the close of the previous candle. That is your goal. The top of every candle acts as a weak area of resistance. The bottom of the candle acts as a weak area of support. So when you enter a long trade, you always want to enter 1 tick above the close. If you enter a short trade, you always want to enter 1 tick below. This is going to give you a precise entry. In a fast-moving market, it's a tool that's going to get you an exact entry almost every time. And the NQ today, at certain points, was really moving like a hurricane. And the only thing that allowed me to trade it was by buying an up close or selling a down close. I didn't have to run to the dome to put in my buy stop or put in my sell stop. And my ATM, automated trade management strategy, immediately came up, and I was good to go. Now I'm going to drop the number of ticks we're trading. This happens quicker. Let's go to 50. And I'm going to show you a couple of other things. Now, let's say that you want to buy on an up close. That's going to happen very shortly. All right, so hang on. Whoops, I think I have to also reprogram it again. Excuse me 1 second. Let me take this off. Edit. Put this into the dome. Now we're good to go on 50 ticks. Well, let's say we're going to buy it up close. And these are things obviously you're not going to change in the middle of trading, but we're doing that. You're in. Again, 1 tick right above the close. Now, where's your exit strategy? Now, you could have an automated trade management strategy where this trails the trade. The way that I do it is I look for a first target hit, and then you're going to see this, and then you're going to see the stop come up to break even. Now, let's say the market starts moving to the downside. What you can do, now I'm going to move the stop all the way down here. So that's going to be where the market would normally stop you out. What you can do is simply hit close on a down close. And the first reversal candle is going to take you out of the trade. No matter where this stop is, as soon as this reversal candle closes, your trade's going to done. You're out. So it's a great way to trail the trade. The trade goes up like this. No reversal candles. You hit close on a down close where you're long and you're out at the close of the first down candle. So it's a terrific way to trail the trade. So if we sell on a down close, we want to get that precise entry 1 tick below the close of the candle. It's coming, and it's coming down. We're in. This one gave us a positive tick of slippage. Now here's my pre-formatted stop. And I'm going to take the first target. I'm going to move it all the way down here. So there's my stop now. Let's let the market run just a little bit to the downside. Can't make it run any faster than the data feed will let me. Let's let it go one more candle. It's going to happen very quickly. Now remember, we're going to close on an up close because we're in a short trade. So the first time that the candle closes to the upside, we're out of the trade. In this particular case, we can set a very big target. And I put close on a down close instead of close on an up close. I'm sorry to close the trade. But what I wanted to do was close on a reversal candle. And you saw it took you right out. Now, if you're in the trade and you buy right here, when the market's heading down, so you don't have to wait for a candle to close if you don't want to. If you do, it's going to get you an exact entry. Here, I just ran in and took it. Let's let it go one candle down. Now we're going to close on an up close. There's our stop. Now that's our full loser if we let it go all the way here. So the first thing that we do is we just set to close on an up close. The first up candle is going to take us out of the trade. That's a great way to trail a trade. Irrespective of what your ATM is now, on a short trade, you close on the first up close. On a long trade, you close on the first down close. And watch the trade took us right out. So you really get precision entries. If you believe that there's an actual queue, and there's a certain, and if you're looking to buy the market, and there's a certain number of traders on the sell side, and let's say there's 500 traders looking to buy and 450 looking to sell, and some traders are going to get slippage on the trade, and electronically that's the way it's supposed to be. No one's supposed to be favored. You're going to get your entry faster and be quicker in the queue, because as soon as you want to take a long trade, from the first tick the candle moves up, you hit that buy at an up close. You don't have to fumble on the dome. And this is a very gentle moving market, but you know what happens when the market moves at rocket speed. It's sometimes very, very difficult to get the entry you want. Doesn't matter what you're trading. Now, it's tougher if you're trading ticks, and it's tougher if you're trading time, because you don't know exactly when the market's going to close. This is going to give you that precision entry, because the software is going to determine when the candle closes, fire an entry immediately. It's pre-programmed and give you a trade. Now, hopefully you're going to get a full win. Now, it also has a really interesting feature that can really provide you with a tremendous advantage. Now, you're not going to see this anywhere. This is a patent pending tool. It's been pending for a long time because they keep coming back to us for updates, because it's got so much code. And here's what you can do. Let's say the market is so choppy that you believe you can program a one-tick pullback. Now, what that one-tick pullback means is, what I'm going to do is I'm going to reset the strategy. I'm going to go back to range, so we know where it's going to close. We have an idea. Let me just go to the data series. And we're going to go back to range. What we'll do is we'll go to a 5 range. Now I have to I'm going to hit OK. Let me take out the all the print. And change the strategy in the NDT to a 5 range. And it's real simple to do. You just take this and you go to range. This isn't something that you're going to be doing while you're trading anyway. When you're trading, you're going to know the size of the candle you're going to be trading. So we're on a 5 range. Hit OK. And now we're set to go on a 5 range chart. So let's set it down. Now let's say the market is so, and what I'm going to do is I'm going to add one more indicator. It's called our bar closes indicator. I don't see it working. Hang on. Okay, but our bar closes is set for a different kind of chart. Um, uh, and what we're going to do is we're going to take this out. The tick counter, we're going to remove. Now the bar closes would have told us when we're going to get it a close to the upside or close to the downside, but we have it formatted for Unirenko. But now we know every 5 ticks, we're going to get a new candle. Now with the NDT, I'm going to bring it back up. Let's say that you believe the market has so much chop and movement in it that you can actually program in to trigger 1 tick below the close of the candle, but come back and get you on a 1 tick pullback. So we're going to sell a down close. There's no range counter here. When it goes to the 5th tick, you're going to get it. You're going to get a close, but now you need a pullback. Now you're not going to get it on this data feed like this. Now, if it was the normal market choppiness on a regular feed, now you see that 1 tick pullback puts you in the trade. And then if the market continues in the trend, you've just grabbed an extra tick on the trade. So essentially, when the market triggers 1 tick below the close of the candle, and the market's wiggling around enough to ensure that it's going to pull back a tick or two on the trade, it's actually going to execute you on a 1 tick pullback. You can do that on a 2. You can program in a 2 tick pullback. Obviously, a 3 tick pullback is really risky. But what you're looking to do is to start the trade already 1 tick in the plus. Now, just to make it really clear what's happening, here's the candle. Now, the tool is not going to fire unless price comes up 1 tick above the close. At 1 tick above the close, here, it's going to trigger, but it's not going to execute here. So it's broken the weak resistance of the top of the candle. Let me just move this to the middle. But then it's got to come back 1 tick to fill you. Now this works really well on Forex, where the market is jumpy and you have a spread that you have to overcome. It'll trigger 1 pip above the close, then come back a pip to put you in the trade. Now, right now, where the NASDAQ is so jumpy and moves around, remember, we're not in a live market here. You can grab that extra tick. So if your first target, our first target on the NQ is 10 ticks, and our second target is 20 or 15 and 25. It gives you a tremendous advantage to start the trade 1 tick in the plus. And the NASDAQ moves around so much, you've got that wiggle room at the entry. You can program that 1 tick pullback, and you can program it on any instrument at all that you like. Now that kind of configuration you're not going to see on any other trade management tool. And you do not have to deal with the NDT, which is a major headache for me at least. I mean, I don't like trading off the Superdome. And I don't like trading extra money for the static dome. Remember, if we were trading a live market and it was 9:35 in the morning, and we're trying to trade the Dow, the NASDAQ, or Google, or one of those really volatile stocks, this thing is going to be flying. And if we want to get a trade at the close of a candle, one tick above or one tick below, we have our hands full. If you're trading time or if you're trading tick, you never know where the candle again is going to close. Even if you're trading range, you already know. You can set your buy stop or sell stop based on the open. But it's still a major headache. And it's still easier just to hit a button and let the tool get you into the trade right at the appropriate time. I'm going to show you a few other trade configurations. There it is. One tick above. Now it hasn't executed because I still got that pullback programmed in. And right now I've got it moving in only one direction because of the trend. So you're never going to get that pullback unless I move this. But there you're in. And you've got an extra tick on the trade on that pullback. And that can mean a lot of extra money. And also to be up on the trade, a tick when you first enter is really a tremendous advantage. I mean, it's the way of Schneidering the market. And I'll tell you one other thing. In a fast-moving market where it's stuttering around, a one-tick pullback requirement absolutely guarantees you cannot take slippage on the entry. Because if the entry should be one tick above and it slips all the way up, now this is independent of the dome. It has to do with the speed of the market, the number of buyers on the sell side and on the buy side and sell side, and you're going to take 4 or 5 ticks of slippage on the trade, and you program in a one tick pullback, you're never going to get an entry. And that is also a tremendous advantage. If you require the one tick pullback, you eliminate the potential for ever getting slippage on the trade. Now, certain markets, it's tough to get a pullback. It's tough to get it on the E-mini. It's tough to get it on instruments that have low volatility. And the E-mini has significantly, has a lot less volatility than the Dow, the NASDAQ, the Russell, which is also like a hurricane in the morning. Most of the stocks in the morning are also really fast. It's so easy to get a 1 cent or 2 cent pullback if you're trading an instrument like Google or Amazon, or even the cheaper stocks. To get in already up on the trade it really provides you with a tremendous advantage. Now you can hit close. Now you can always buy. You can always sell. Now, in some cases, when you're trading Renko charts, Renko traders will buy the up close or the down close. And you can just hit this button. And then it's going to execute the trade no matter which direction the candle closes. We move this down like this. It doesn't matter where it's going to close. It's going to execute the trade. Now it's got to move the requisite 5 ticks on a 5 range. That's the only thing. But once it moves 5, it doesn't matter in a live market whether it's 5 to the upside or 5 to the downside. And obviously, this data feed can also be slow. Doesn't matter. And you're in here 1 tick below the close of the candle. Exactly. Now, again, what I wanted to show you was, and I'm going to take this 1 out, and we're going to go back to 0. is that also you can configure any ATM, automatic trade management strategy in here that you want. It does not make any difference. And you can trade, and you can put in here multiple ones. You can dial them in. I have 4 here, 2 for the E-mini, 1 for crude, and 1 for the NASDAQ. But you can put in an unlimited number of automated trade management strategies that you like. They're very easy to program. And if you come aboard, we're going to program them all for you. We'll give you our recommended targets and stops. But this is a white glove installation. We're going to do all the installation for you on this ourselves. You don't have to worry about any of that. We're also going to maintain it for you. So if we do an upgrade or we do an add-on, you're going to get that. The other thing is you can take a market order, you can take a stop order, or you can take a stop limit order. The kind of execution that you want is totally configurable. Now, if you're going to sell a down close, we take a stop limit. If you want, you can take a stop. And if you want, you're going to take a market order. Now, with this tool, it really doesn't matter a whole lot, but I like to take the stop limit order on the down close. Because my goal is to minimize slippage, and I want to guarantee that I'm going to get the price that I want. And this tool is going to do its best to get you that price. Now, the only other trade that you can also do is, let's say we're going to sell. Let's buy because we're moving up. Let's hit the buy automatically. Let's let it go up a little bit. And let's say you feel that the market has gone up so far that you just don't feel it's going to go up any further. Or let's say that it's moving up into a strong area of resistance on the up close up here. Let's say this was a pivot, something that made the trade very difficult to get through. Now, you can take the risk. Obviously here it's going to break because we're just doing the sim. Let me close it and do it over again. But here's what you can do. You can buy. Let's move this down a little bit so we don't have it moving up quite so rapidly. What you can do as it approaches that area of resistance to the upside, you can hit close on close. So as it approaches that area of resistance, now you can hit close on an up close, but you might also be concerned that as it gets close to resistance, it's going to bounce off of it prematurely. Because remember, an area of resistance acts like this. It's not just a discrete area. A pivot has a zone. So you're going to want to take your profit before it gets there. And as it approaches it, you just hit close on close. If it happens to bounce prematurely, you're out to the downside. And if it actually makes it, it would have closed automatically. So you're actually taking profit and closing the trade. You can just hit close, but you can let the market play out and potentially take the risk of it hitting the pivot and moving through. And all you're doing is risking the length of one candle on the bounce to the downside. So I hope that makes sense. As it approaches the pivot, you can either just close the trade or you can close on close. And if it hits the pivot and doesn't move through, bounces to the downside, you're out of the trade. And if it breaks through, if it doesn't break through, I'm going to close. In other words, this is the case where you're going to close under any circumstances, no matter what the candle does. I'm trying to think if there's anything else that I have. Again, you can trade multiple instruments. I only have the NQ activated, but you can have 9 or 10. Now, what you can do, I'm going to bring up a few NDTs, is you can have multiple NDTs up. Here's another one, and you can set this on crude. And there's another one somewhere around here. I think I might have dropped it. Let me find it. And let's say you want to set this on the E-mini. You're going to put that below the chart on the ATM that you want to use. Or you could trade one and just dial in the instrument that you want to trade. It's really up to you. So you can bring up an unlimited number of domes, and you can take more than one trade at the same time, as long as your account can handle it. If you get a long trade on the NQ, then we're only projecting one market, because that's all you can do on the simulated data feed. But if you buy an up close, see, I've got 3 domes up and 2 are on the NQ. You just got to make sure that you don't have that. Let's put this to the ES. So, all right, let me take these down. Here's what I do here. I have to put this to the ES. Now we're good. Do the market affected order. Let's see, this is ES, crude, and the NASDAQ. And this should buy an up close here. I don't know why it's not. I would need Sergio. I mean, this should not be a problem. We've got the NQ, crude, the E-mini. I have multiple domes up when I trade live. I have one up for crude, I have one up for the NASDAQ, and I have one up for the E-mini, just like you see here. So I don't know what the problem is. It's just my technical ability, because Sergio brings it up in the morning and it comes right up. And I know what it is. 2 of these domes are set on Unirenko, and only 1 is set on range. So that's the problem. You can't have it set on 2 different strategies. Now, so let me take these off. Set this to the NQ. I don't know what the problem is now. Hold on. Let me take it off. Let me start it up again. And there. I don't know. I don't know what's happening here. Let me take that out and take that out. I only have 1 activated. There we go. We're selling it down close, and you can see exactly what we got. Now it's doing something that it didn't do before. It's showing you where the calculated entry is. And there it is. Now, I don't know why it wasn't doing that before, but it should project that. Let's do that again. We're going to sell it down close. And there's the close that's already been determined by the NDT based on that 5 range. And as soon as it hits it, it executes. So it already knows where the candle's going to close based on the fact that you have 5 range programmed. Hang on 1 second. Okay, it's got to be stop limit to show where it's going to enter. It comes with a 25-page manual, and Rory's going to configure it for you and tell you all these things. So you don't have to worry about the configuration or any of these nuance. So let's close it one more time. Let's buy an up close. And on a stop limit, it's not letting us buy an up close. I don't know why. It's letting us sell a down close, but it's not letting us buy an up close. And this is just my own technical acumen, which is not that great on because I don't configure this. Sergio does in the morning before we open. It's really, really very, very simple. Let me show you why we can't buy an up close. Hang on one second. Now, I don't know why it's not letting me do that. I really don't. Let me try stop. Don't know. I don't know why. It's just a technical issue with the with my ability to configure, and because I've been moving it around, I have it set on a 5 range, and I'm not exactly sure why. I've never actually seen it where we can sell a down close and not buy an up close. But like I said, you don't have to worry about configuring it. And there's your entry, right there on the close. So it's really about getting into the trade early, earlier than anybody else. It's not having to determine where your entry is going to be. And I can reconfigure it on time. And in fact, I'll do that really, really quickly. I'm going to close up. And what we'll do is we'll configure it on 1 minute. Actually, why don't we do 30 seconds? Now, I just have to come over here. Excuse me. Let me bring this over. Okay, see my control panel. Okay, let me close this. We bring the control panel over. I'm going to go to the NDT. I'm going to go to the 5 range. I'm going to go to edit strategy. And I'm going to go to seconds, put in 30, hit OK. So now the strategy for this NDT is a 30-second. Hit that, up they're going to come. Obviously, this is not something you're going to do while you're trading. And now we can put in. I think there's a minute counter. Or time. So I don't trade time, but I think there is somewhere here. I'm not going to look for it. We know that it's going to close every 30 seconds. And we don't know exactly where it is going to close. So let's come back up here and buy an up close. Now it should be moving up. It's a sim feed. I don't know. I don't have the time down here, so we don't know when it's going to run out. Now it didn't close because there was no up close. Now we're going to have the up close. There it is. And that's an exact entry. Actually, it actually gave you, there's the entry. It pulled back a tick. If you configured that 1 tick pullback, it came back 2, and up it goes. So you don't have to worry where this tool is going to close or where the price is going to be at the exact time it closes. It's going to get you right into the trade. And again, you can manage it using this tool. You can keep, you can continue with the market going up. Let's take our second target, move it all the way up here. As long as it keeps closing to the upside, you continue to make money. Now, what I like to do on the trade is as soon as I'm in the trade long, I hit close on a down close. Because once I get a reversal candle, I want to be out of the trade. As long as I keep getting up closes, I want to stay in the trade. So I'm moving up. All of a sudden, the market starts to fade. Now, there's no down close here. This is still an up close. The first candle that closes on a down close, we're going to be out of the trade. Out. So it's a great way to trail a trade. I mean, you can continue to garner profit as long as the market keeps closing to the upside on whatever kind of candle that you're trading. And the first reversal is going to take you out. Now, if you're trading range and you know exactly how far you want, every 8 ticks, you get an up close, 8, 16, 24, whatever it is. As soon as you get the reversal candle, you're going to be out of the trade. And you can really watch a market move I mean, today I'm not going to put a live data feed in here, but you could have gotten great trades on the NASDAQ to the downside. It went 15 points without an up close on a Unorenko chart. So you just keep moving that, it just keeps heading down. Now you can set your final target at 10 points, whatever. You're only at risk for 1 candle. So you can see how much easier it is to trade. And the other thing is that I really want to stress is the fact that you don't have to chase price. And then I'm going to answer any questions that you have on the Dome. I mean, for me, it's a major headache. Listen, you want to focus on one thing, looking at what's going on in the market, making an assessment of your strategy, looking at your indicators, looking at all the things that you use. If you don't trade with indicators and you just look at price action, studying the charts. You don't want to have to start fumbling over at the Dome on a fast market to try to get into a trade at the exact price you want, because you're not going to ever, it's going to be almost impossible. Market is moving too fast, and on time and tick, you don't know if you trade the close of the candle where it's going to be. This tool will get you in immediately. And like I said, if you believe there's a queue, and I do believe there's a queue, you're going to get in first and you're going to get minimal slippage. It's the only execution tool I've ever seen in my life that can guarantee no slippage. And that's by programming in the pullback. Now, it's a little risky because if you're trading something like the NASDAQ can move through your entry at 100 miles an hour and never give you a pullback. But also, if it moves through at 100 miles an hour, it's likely to give you a significant amount of slippage. So it's going to guarantee you avoid getting slippage on those trades. It's the only time I've ever seen that. On the Forex, it's a great way of minimizing that pip spread. I mean, if you have a 2 pip spread, you can reduce it to a 1 pip spread. You get the trigger on the entry, but you get the entry on a 1 pip pullback. So it does a great job of helping you helping you get a winner. I mean, if your first target is 6 or 7 pips, you know, you've got a 12%. You're up 12% on the trade right at the outset. Still got to move a bit more, but that 1 pip gives you a significant advantage. If you're trading 8 range, 12 range, whatever you're doing on futures or on stocks, anytime you can take money out of the market's pocket, it's a tremendous advantage. If you can get into the trade at exactly the price you want, and you're already up money, it's going to increase the chances that you're going to get to your profit target and make money.